So pleasure and thanks for having me. It's our first webinar and we are excited.
Everybody can see your screen. I would like to say to everyone, hello, Eric. Good evening to you. The Q&A and the chat, they are open. We're going to be dropping the emails there in case for any follow-up questions, something that you might process in the future. And I think we are good to go. Theo, again, one more time, the Trading Pit always try to focus in quality educators, and I'm very happy and glad that you made it to be here with us. So without wasting any more time, the stage is yours. Let's enjoy the webinar.
It's an absolute pleasure, Alex. Thank you. Thank you so much for having me. Guys, everyone, good evening, good afternoon from wherever you are in the world. I hope you are enjoying your, let's get rid of this, you're enjoying your time, your trading, if you're trading around the New York trading session. So our first webinar, it has the privilege to be about how to pass the challenge. Now, before we start, I always like to ensure that everyone's understand and everybody understand that this content is for general information only and it's not intended to provide trading or investment advice or any kind of personal recommendations. And thank you so much for understanding this. Now, for those who see me for first time, allow me just to take 30 seconds, let's say to 40 seconds to introduce myself. My name is Theo. I'm originally from Cyprus, but I used to live for more than a decade in Australia, in Melbourne, actually. And regarding trading, I'm chief analyst and trader at MarketMinds Mastery. It's an online education, mainly academy, and of course provides personal coaching to traders and all this stuff. So you can check us out. Now, in trading, I'm a certified financial technical analyst. I'm a member of the Society of Technical Analysts. I hold the CFT certification. I'm also certified market technicians. It's been actually 12 years. It's the 12 years now in trading. When it comes to trading, because I started with the currency trading, I got very occupied, I would say, to understand how the one currency worked with the other, and that opened up the opportunity to specialize more in currency correlation. And it's something throughout the webinars I will expose you guys, and you're going to find it really interesting. All right, and on a daily basis, besides trading, I deliver market analysis and weekly analysis. We upload the first one here at Trading Pit, so you can check it out for the most lovable tradable currency pairs and commodities and indices, and to some hedge funds and private companies. And I create educational courses for trading as well as investing. I publish some articles about trading, and the latest one was in Financial Magnets about the WTI and the correlation of the US dollar. And many people in the industry, they know me that the guy who used to interview Steve Ninson, who introduced us to the candlesticks, Mr. John Bollinger, an interesting trading personality, and one of the brilliant economists in Europe, Daniel Lacalle, and many other, many more people. So let's get immediately to the agenda of today's webinar. So in order, guys, to pass the challenge in the prop firms, people usually, they come to me and they ask me, hey, Theo, I'm stuck. They come after they stuck. Okay, but the idea is to understand the challenge as I will say, a product before you started trading. You don't need to go through many challenges in order to understand, to come to the realization, or maybe I have to look somewhere else. I mean, I have to understand something a bit more to start trading. Okay, I will walk you through that. It's very simple. It's just very crucial. Okay, so I'm sure you're going to understand it. What I like to call it, it's the benefit of 90 days, because that's what going to help us to create the consistency we are looking in trading. We want to put everything down to a trading plan. Of course, guys, I understand many traders, we do have totally different trading personalities. A trading plan and execution, the execution part of the trading plan maybe is different for my taste than your taste, and vice versa. However, the components they make the trading plan, they are equally the same for every one of us, the traders out here. Okay, so we'll walk through what is important for everyone on this webinar. Okay, and I would like to introduce you to how you have to start thinking in terms of unblocking yourself from some barriers you have in trading. I'm not talking about psychology stuff and all these things. Okay, I'm going directly to the trading, to where the problem is, the issue is in the trader. Okay, we're going to say a few things at the end of the webinar, so please stay until the end. Remember that this webinar is exclusively for you guys. We want you to learn and finally to experience the trading from the perspective you want to experience it. So what's in with the 10%? Now, there is the 10% max drawdown on every challenge, right? We have the light, standard, and most common is the executive and also the VIP challenges. Now, I will focus in this webinar not only, of course, not only on the maximum drawdown, but also on the profit target. Guys, just to ensure that everyone can see my screen. Alex, maybe you can confirm, or guys on the chat.
Yes, yes.
Can you read the 10% max drawdown, everyone? Yeah?
Yes.
Okay, perfect. Thank you. So, the profit target is 10% on each challenge and 8% on the VIP. Okay, but for the purpose of simplicity, I would like to keep them pretty much equal. Okay, I will try to keep the max drawdown and the profit target to 10%, just to keep it simple. And then you do, if you need to do different maths, you can do them yourself. Okay, we are not here to do math equations, right? So don't worry about that. Now, as I said, amongst the most popular challenges we have here at the Trading Pit is the executive and the VIP. Now, the executive, as we all know, or we might going to find it out, it's an account balance, if I'm correct, of 15,000 virtual dollars. Okay, so it's not real money. And you can read on the disclaimers that all assets and trading activity are purely virtual, just to avoid any kind of confusions. Okay, and the account balance, the challenge account balance for the VIP, it's to 100,000. Now, let's go to the next slide. There are two strategies, guys, we can I use All right, one of the two, it's going to work perfectly for every trader. Okay, now the one that you will decide it's going to work for you, just feel free to use it. Okay, and I'm sure currently you are using one of these two. You most likely are using the second one, but there is a very, very important thing behind the, as I call it, the PAS strategy, PAS, pips accumulation strategy, that unfortunately or fortunately you don't see it that often, or you don't see it on YouTube or the way I discovered this for myself is when I really, at the beginning, I was trying to understand how the trading industry works from inside and outside. So what this strategy involves is the idea to treat equally all trades we initiate. So if I will open a trade of the euro US dollar and I go long, or if I'm going to open a trade of the euro New Zealand and I will go short, I will treat the same trade with the same amount of risk. I will repeat that. This strategy involves to treat every single trade equally in terms of risk. So, assuming that the VIP that has 10% max drawdown, it equals to the virtual dollar of 10,000, and equivalent the the executive of the 50,000 times 10%, it's $5,000. Now, it means that if we trade one lot on each challenge, the first one, the VIP, allows us to use 1,000 pips to trade 1,000 pips, or to risk 1,000 pips, either to pass the challenge or to fail the challenge. And on the same scenario, it goes down to 500 pips on the executive plan if we're going to use one lot. Okay, guys? Any questions so far? Feel free to use the chat, guys, and if I can read any questions, I'm happy to answer them on spot. That's no problem at all. Okay. So how can we use that in our benefit, and also why do we need to be aware of that? I often see traders coming where their accounts are like almost to the max drawdown, and they ask me, Theo, help us to recover the account. Okay, I will help you to recover the account if it can be recovered. I mean, I'm not a magician, and unfortunately I don't have a crystal ball in front of me to know where the market is going to go right now. So if we knew that information, we would have put everything on one trade, right? We don't know. We don't have access to that information. So I will come back to that with a real example. Just keep in mind that the first way to approach the challenge is by using fixed lot size. Maybe it's going to be one, maybe it's going to be half lot. Depends. I just use the one lot for the purpose of simplicity in the calculation. And the next one is what most of the traders use, the percentage trading. Now, in this particular one, guys, if let's say we use 1% on every trade we initiate, on the VIP challenge, the first one, every trade we initiate will be under $1,000, let's say, virtual money, virtual currency. risk on every trade. So, and the second one will be 500. On every trade with percentage, we set up, and pay attention to that, on every percentage trade, and that's general, we set up our trading account up to a limited and fixed number of trade setups we're going to take in order either to pass or fail the challenge. If you risk 1% and your max drawdown is 10%, I think it's simple equation to figure out that we have 10 trades in our disposal to take advantage of those, and hopefully, if they turn out to the price to move in our direction, to experience positive results. But on the other hand, you have to, guys, understand that this is going to be your map in the challenges. You, as traders, the only thing, can anyone tell me what is the only thing we can control as traders all time long? That's the only one thing, one and only thing every single trader, you, myself, everyone, can control in trading. Can anyone, can you give me
Anybody
an
has any
answer,
ideas?
maybe? What do you think? There is no right and wrong answer here, guys, okay? Omando asks, would it be okay to risk 0.5% on a trade? You can risk as much as you want on a trade. And as I said, I'm not in a position to give personal or financial advices here. The risk is purely based on your risk tolerance. But any kind of percentages, guys, you can use as long as you understand how it adds up in your challenge. For example, 0.5%, it sounds good to me, and it gives you, let's say, 20 trades to take advantage or experience different results. So I will expose you in few live examples to explain you exactly, because I would like you to get aware of these particular approaches. Okay, so I'm going back to the question. Maybe because I'm new here and you don't want to answer, or maybe I didn't explain the question right. Anyway, you will know me in, after a few webinars, that I like to make, in my opinion, nice jokes. Okay, because I understand that I'm the one that makes the talk here, and for you sometimes maybe it sounds a bit boring. I just like to help you to be engaged with this webinar. Guys, this webinar, it's for you. Feel free to ask anything you want to ask, and nobody will judge you. You're here to learn. You're here to find out things you may be missing. You are here maybe to ask questions, and trust me, every trader, because some time ago, many years ago, okay, I was also you on the webinars. I was sitting there and waiting for someone to tell me something that I wanted to hear, to unlock me, to help me move forward in my trading. Okay, so everything is okay. Eric said the chat is disabled, can only use this Q&A window. Okay, guys, I didn't know that. So
Well,
you
they
can type it on the Q&A,
window.
no problem at all. So the question is, can anyone think what is the only parameter a trader can control all the time while trading? So simple answer is how much currency, virtual currency, we can lose if the trade goes against us. And that's, in other words, it calls the risk on the trade. Thank you very much, Gyrant. If someone doesn't want me to pronounce your name, guys, you just say, don't say my name, and it's okay. All right. So, and that's the risk. That's the only thing we can control. So, why most of the traders, they don't, instead of focusing on what they can control in the market, they focus on what they cannot, what they can't, with T at the end, control in the market. We have to focus on what we can control, and the rest will take care themselves. Okay, let's go to check few examples that I prepared for you. This was a pending order. When you later on, when I will host more webinars, and because I love also price action, I will tell you my two basic bread and butter price action setups I use: the engulfing, anticipation of engulfing, bullish, bearish engulfing. Let's say 98% of my trading activity is with engulfings. Okay, so, and that's because of the art of consistency. Okay, I will tell you at the end of the webinar about this. So, in the first approach, guys, we explain that if we're gonna risk a fixed lot per trade, we will know all the time how many lots left, either to draw down or to the profit, to the target, not the profit, to the challenge target. So when you do the VIP, when you trade the VIP challenge, you have 8% profit target, and you have 10% max D, drawdown. In Australia, we used to cut all the words short. Okay, so excuse me for that. The drawdown, I call it D, but I will make sure. Okay, I will not write drawdown, but I will just say. Okay, so in this scenario, the 8% target, it has to be with one lot on the trade, 800 pips. Sounds sometimes that is too much, but remember, we don't know what might gonna happen in the market. Let's say if that trade, I cancel that trade, okay? But let's say that trade worked well and it pushes the price. That was the sterling GDP, GBP, US dollar on the hourly chart. That was the sterling right in the middle of the London session early this morning. What if something happened that we cannot control and took this price all the way up and surpassed all resistance, intraday resistance here? You have a lot of things to learn, guys, from this webinar, trust me. And supposed to be a resistance up here, and it made all this move all the way here. Okay, now, and on this scenario, if we risk one lot or two lots or as many as you want, half lot, whatever, it just go purely based on the number. You are happy to do it. But if we risk one lot for this trade, and let's assume that this distance is 20 pips, the risk on this trade is 200 virtual dollars. Okay, based on these 20 pips times $10 one for each pip, and that's $200. So if the trade got triggered and it went against my my direction, I will have been kicked out, and my account will be down. The challenge will be down with 20 pips. All right. But and this is why I encourage many traders at least to think about that and try it. Why? Because the most important reason to trade with fixed lot without saying do it, I'm just saying it as an example, is the the freedom it gives the trader, the mental freedom. Like, it's different thing, guys, to say, and we don't have too much time on this webinar to go through things that I can talk to you about hours and hours to learn and establish new way of thinking in trading. It's different to say to yourself, oh, I lost $1,000 on the trade. And it's different to say to yourself, that trade went down 20 pips. You don't have the association that creates or kicks off the feeling of regret, the feeling of disappointment, and too many things that it's not for this webinar. Okay. Gerard, I usually go with a fixed lot, not with a risk percentage, but personally, when I use the risk percentage, I try to be somewhere around to between 0.5 to 1%. Okay, personally. Now, on the other hand, guys, if we use the approach B and we go with percentage per trade, there are two different variations on that. The first one is we set up our challenge account to a fixed amount of trade setups we will execute throughout the challenge. Because what means 1%, for argument's sake, you can do it 0.5%. It means that instantly the lot size increases instantly, which means, yes, if the trade goes as we expected and we experience a winning trade, then our challenge, we are go one step close to our challenge, to pass the challenge. But remember, yes, all traders from nature, you like it or not, we have that greed inside us. For some of us, it's a force mechanism. It's nothing wrong. We cannot hide from being a human being, right? But we have to also understand how these emotions, they're gonna affect or benefit our career as traders. Okay, and we cannot eliminate any emotion. We can, and that's how I teach everyone on the personal coaching. We learn how to live with every single emotion we have as human beings, because when we're trading, there are 10 different emotions from the low extreme to the upper extreme that they are sitting there all the time with us, and they are very active. So we learn how to live with them. So the first thing, going back to the approach B, when we trade percentages, we set up our challenge at the fixed trades. And we explained that earlier. The second thing, if the challenge account from 100K, it goes up to 105K, it means the account needs another 3,000 virtual currency, to pass the challenge, right? Now, how do you manage the percentage you're going to risk on that trade? If you're going to risk 1% on this trade, the next trade, and it gives you positive result, that's great. But what does it mean 1% now on this new equity? It means on new this virtual account. It means that 1% instead of $1,000, it's now 1,050, isn't it? Yeah, 1,050. So the risk increases in this trade. So it's something that you have to also understand. And again, it's great thing, in my opinion, when the trade goes as we expect it. But what if the account is, what if the challenge is instead of 100 virtual dollars, it's to 95? Then if we risk 1%, we risk less than we start risking at the beginning. So what do we want to do? Are we going to increase the risk, and we're going to risk, let's say, 1.3%? So these are things, guys, you have to ensure that you understand them. Okay, and trust me, once you understand, I'm trading and actively coach traders for many years. I went through every single stage you can imagine. I went from making extreme trading results within hours, and I went also to the other side, okay, within hours. So I'm sure you understand what I'm trying to say. It's just a little bit with the words to make sure we are as we're supposed to be here. So when you understand how every approach, what every approach includes, the pros and cons, then you're gonna be much more calm when you are trading, because you will know that, okay, that's how it works. That's what I'm doing because I trust it, because you're going to try it, you're going to do some testing, back testing maybe, perhaps, and you're going to see, as long as you understand the mechanics, then you can decide what's on your best interest. Question from Omarto: how can we ensure consistency with our approaches once we pass our challenge phase? Thank you so much, Omarto. It's one of the best questions someone could ask, and thank you so much for asking it. We're going to answer that question in a few minutes. How can we ensure consistency after we pass the challenge? And I think, if you want, I have to make a separate webinar based on this subject, and I will write this down, okay, because it's something I believe many traders are looking to ensure. Okay, how can we ensure consistency? Alex, if you help me to keep that sentence saved somewhere, so we can make prepare a webinar about that. Now, as I said at the beginning, when traders they contact me for private coaching, they always ask, how can I find this consistency in trading? And the most important thing, guys, is, as Omardo asked, and it's not only you, Omardo, that has this question, it's many traders, they are asking this question after passing a challenge. Guys, after passing a challenge, how can we find consistency? It's something that is worth mentioning. So Why do, let's say, I have 2 winning trades after I experience 2 winning trades in a row, and then I get very frustrated and I end up losing the challenge? Okay, maybe some of you can associate with that. How can I stay disciplined? And that's another misunderstanding word in trading. How can I stay disciplined? What should I do? Can I stay disciplined? But people, traders, they must ask this question a little bit different. What can't I do so I can stay disciplined? Okay. How do you decide which strategy is best for intraday trading? And trust me, so many questions, but everything comes down to this behavior, consistency. Consistency, guys, it's an art that we develop. It's not something we buy from the grocery shop, or it's something we're going to find it in the most brilliant books. Okay, it's something each trader needs to develop it in his or her own way. Consistency, dear friends, comes from confidence. So people, when they ask me, how can I find consistency? Help me to find this consistency. It's like they are asking me, let's go on the west to see let's go on the east to see the sunset. It's like you are looking in a different direction to find something that it's on the opposite side. So consistency starts from, it's an outcome of confidence. But confidence is the result of trust. Trust, on the other hand, it's the end product of repetition. And here is your key word. And here is where you have to come in a short sense to go up here to the consistency, especially after you pass the challenge, guys. But repetition means we have to do the same exact thing over and over again. All right. In trading, the way you do anything, it's the way you do everything. And I say that again, the way we do anything, it's the same way we do everything in trading, guys. So consistency is the end result, it's the final product of this chain. Maybe it has a different color for some of you. Don't stick to the color. Okay, just stay focused on the words here. So we have to do the same thing over and over again in order to gain trust of what we do. And that's going to build confidence. If we don't do the same thing over and over again repetitively, then we will never build trust on doing that, on executing that methodology, on trading that way, on trading in that time frame, or trading in that product. And if we don't trust our own trading abilities, then we will find it extremely hard, if not impossible, to build up to build up confidence. Okay, so if we don't build confidence, then how are we going to build that consistency? So everything comes down to the bottom here, to do the same thing over and over and over again and stick to that. I see traders, and it's something that I did myself back then. That's why I understand you. At the beginning, when we start, especially when we start trading, we get excited and we just get few trades correct, right, in our direction, and we feel that we are we are the kings of the market. Okay, and then we just forget. We think that what we did, it's the most simple thing. It's very simple, and we need to try something else. Let's say we used to trade on the 4-hour chart, and now we're going to go to the 5-minute chart because we think that we run the market. Next, trading plan. Guys, trading plan is your map. A trading plan is the way that you're going to really find consistency. When you experience losing trades, by having a robust trading plan, a trading plan that you can trust, a trading plan that it's your trading plan, it's going to be much, much easier mentally to continue trading. A trading plan, it's the only way to help you execute trade flawlessly. All right. And a trading plan, I always say that it's worth nothing unless you can trust it. So if you turn up if you open your chart, let's say today, and you don't know, you don't have a trading plan, you don't know what are you looking to trade, you don't know, you just know how you're going to trade, but you don't know under what market conditions you're going to trade. The markets, they are so dynamic. Their market condition changes rapidly, drastically, and that's what trading is, to understand under which market conditions you can trade. So someone, by looking at this, can say, at least most of the people here can say that, yeah, excuse me, I'm looking this overall market and I see that the direction is down, right? Most of us, we will have say, yeah, the direction is down. Maybe some people will say, okay, here it's up, but overall is down. If I don't have a trading plan, how I'm going to take a down, I'm going to trade a downtrend, then when do I enter the market? Where do I exit? For how long am I confident to stay on a trade and all this stuff? Or in this particular scenario, guys, you see this one. Where is the market going? What's your trading plan? Some people, they will say, the market is in a trading range. How do you define that? Do you have a plan that defines what is a trading range? Some people, they will say, if I draw a trend line from this point here to this point here and this there, maybe it's a downtrend. Or maybe this is the range, it broke below, okay, now it's retesting, maybe we can go short here. Or there are so many different things to comment on one chart, and that's why the markets, they move up, they move down, and they just move sideways, because traders, they have different opinion, different biases, and they enter trades based on what they think at that particular moment. Okay. So a trading plan is crucial to help you find that consistency, because if you don't have a trading plan, traders, and because you saw today that actually that's the pound US dollar on the daily chart, for those who may wonder. So you see today this currency pair, and you never ever define a ranging market and execute a ranging trade. So do you understand the behavior of a ranging market? Statistically, ranging markets, and it's something I will teach you, of course, later, ranging markets statistically, after it breaks, if it's going to reverse back to test something within the broken range, usually goes up to the half of the range before it's sold off, usually. All right. So there are some characteristics that they make a trading plan to trade this market conditions. Okay, if you are very good at trading trends or order blocks or smart money concept, and you try today to trade the market that you've never traded, and you do it on the same challenge account that you are trying to pass the challenge and qualify for the challenge, then it needs only one, but only one trade that to go against you and end up being a losing trade to take away all your trading mindset, your positive trading mindset, and start questioning your trading ability. You're going to question yourself as trader. So trading plan, it's important when you're trading, especially after you pass the challenge. But if we don't do the same thing over and over and over again to build up the at the end overall the consistency and the trust, how can we start building that after we pass the challenge if we don't start implementing at the beginning, before, at the time we purchase the challenge? Okay, it's important. A trading plan, guys, it's a combination of three things for every type of trader, regardless you trade support, resistance, smart money concept, again, ISC, anything you trade, everything. It's the risk on the trade, which goes either by a fixed lot size or percentage of the equity, of the balance, of the virtual, of the challenge, the entry point, and the exit price. Okay, all trades, regardless. So if you are trading trending markets, in your trading plan, just very briefly, you need to have some kind of trend identification tools. Like maybe you want to use only price action, and totally fine. You like to watch only the swing highs, swing lows. You can even turn it to the line chart, and that's okay. You can use fractals, that's fine. But when the market is really trending, the moving averages, it's one of the most accurate indicator in the market. Bollinger Bands, when you trade forex market, or they work exceptionally well, by the way, in my expertise. And if you're going to go to our website on the blog, you will see that most of the analysis that we published for this week, the current week, I use the Bollinger Bands, okay, because when they are applicable, they really work well. You can use the Fibonacci ratio numbers. You can use, when you trade forex, usually we go with 50 and 61.8% for the retracements. But when the trend is strong, the market might retrace only at 38.2%. And you need to understand the market conditions. That's what I said earlier. Okay, market conditions are important. If you are a reversal trader, you need to be able to identify significant levels of support and resistance. Support and resistance levels that they've been tested and they hold in the recent time. If you're trading ranging markets, you need to use oscillators, bounded oscillators like the RSI, the stochastic, and you have to understand that reward to risk is different in each trading plan. And again, guys, I can give you so much information about all this stuff, but unfortunately now it's not, I didn't make the webinar to go through each and every one. But if you want, you can leave some comments, some feedback after we end the webinar, and you ask kind of webinars, and I can see what's the best I can do. Remember, we are here to support and help with knowledge, with experience as much as possible. If I hear traders, they come to me and they show me their account, and they are going on reversal trading for they try to go for 8-1, 10-1, which is really not ideal. And for conclusion, for the next 30 seconds, please, the way to stop blocking yourself is, first, you need to learn how to trade a trading plan and not the market. Traders, they try to trade the market. That's why they experience all this frustration. Guys, try to trade a trading plan. That's going to totally transform your trading personality. Traders, they usually look at the psychology to find answers. In reality, the lack of trading plan and consistency, that's all what you need. You need a trading plan, and the psychology, trust me, it's going to take care of itself, because all the emotions, they won't be active to bother you while you're trading. And as we will learn in the next webinar, we will learn how to understand the market dynamics, the behaviors, how the market operates at different time frames, different market conditions. So we understand the capacities of trading on each market and on each time frame. Okay, something that I will deviate the next webinar for this one. And your emotional trading stage, as I said before, will be taken care of with a solid plan. So you have to stick to it, and you just need to trade it over and over again. I think that's all so far. Up.
Yes, Theo, can you hear me?
Yes, loud and clear.
Yes, great. First of all, thank you for the great webinar. I really like the fact that it was straight to the point. And about the trading plan, I need to add, recently we're performing a webinar with a market wizard from United States, John Neto, and actually he developed a whole methodology on how to build a business plan around your strategy. So what you said right now, it really makes two great, ideas together. We had a question about the limits on the challenges, right? Which they can't prevent a good trader from achieving the consistent results. And I would like to answer to that one. We are in the process of tailoring our product according to our traders' needs, and soon we're going to be having announcements, and most probably the limit on the timing on the challenge, it will be changing very soon. So stay tuned. And I would also like to
great
say,
news.
yes, I would also like to say on that one that since the trading pit started existing, we really focused on how to improve our product and to foster a trading ecosystem which it will be friendly, and for those that they indeed know how to trade, going on the scaling plan, but at the same time for those that they are in the process of proper learning, and that's why we provide quality education. So thank you, Theo, for being here with us, in order to
Absolutely,
help
honor and pleasure.
everybody to develop those skills which they are required in order to thrive. Because we're talking about a skill set here, which in my opinion, I have studies in sports psychology, is not really far away from sports itself. When you enter in the field of trading, this is the only thing that it matters, those four lines. The same thing applies to the sports. So I will be leaving my email here right now as we speak, just in case there will be any more questions. Theo, you do the same, please.
Yeah, I also left my email. I don't know if guys you can take it from there. You can read it. If you have any questions, honestly, I'm more than happy. You can just send me an email. I'm a trader like you. I went through what you are going many years ago, so I resonate really well. And trust me, I look forward to help traders. And Jiran
and
just
we are
asked,
looking forward for the next webinar.
Absolutely. Do we have 1 minute? Girard asked question, do you prefer price action via indicator? I look more for price action. Definitely indicator. They are I use them to validate some of the market movement. And also, what is that thing? A question from Girard. What is that thing in brackets that we need to do the same risk management? It's more what you are trading. You are trading ranging markets, trading trend markets, to keep to one thing, do the same for some period until you build self-trading, self-trust, belief, and you are confident, especially when the market is not giving you the results that you are looking. So when you experience losing trades, it's easier for you to keep trading the same thing over and over again.